On the 27th of July, Parliament passed amendments to the Banking Act seeking to cap interest rates at 4% of the central bank rates. This appeared to catch lenders and the central bank flat-footed despite mounting calls to lower interest rates, which average 18.5%. Arguments and counter-arguments have been made on the need to lower interest rates, with banks vocal that capping interest rates would lock out millions from the formal credit market. Seemingly backed up into a corner, banks through the Kenya Bankers Association have come up with a 7-point plan that offers an alternative mechanism to bring down the cost of borrowing as opposed to capping interest rates.
It's a demonstration of our commitment, specific action plans that the industry will take to address the issue of the lending rates as we see it.
The MoU commits that banks will reduce interest rates and notify their customers immediately, in line with the MPC decision to lower the Kenya Bankers reference rate to 8.9%, drop the customer account closing charges with immediate effect, as well as create a 30 billion shillings kitty to lend to SMEs at favourable interest rates.
It's expected that banks will use this Credit Reference Bureau framework together with the product type and loan tenors to start classifying their borrowers into the broad categories of low, medium, and high risk.
In the recent past, banks have over and again promised to lower interest rates, and it is in this regard that the Central Bank of Kenya has insisted on a signed memorandum of understanding that will hold all banks accountable if this does not come to pass.
Those are all things that will benefit the people, and it has the banks don't feel threatened by that. They'll be threatened if they try to stay in the old way of doing business. But as long as they've moved in the new normal, there is less of a threat. I think our objectives are aligned.
Banks will have 3 months to actualize the commitment of their MoU. If assented into law, interest rates would drop to 14.5% based on the current central bank rate that is at 10.5%. The president is expected to give the bill a thumbs up or down in the next 2 days. Mombiwa Roy, Citizen Business Center.